Good morning, good afternoon, good evening, and welcome to our 328th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. Now, the way this call works is this is an AMA, like on Reddit, Ask Me Anything. You can ask me business questions, investing questions, personal growth questions, any questions you want to. And my humble goal is to help you take your career, portfolio, happiness, etc. to the next level. Let's begin. All right, first up, Tommy wrote, is the value of OpenAI overflated? Is the value of OpenAI overinflated? They don't appear to have any current products in the market that they can truly monetize in order to reach profitability. Yeah, I don't think it is. And they are monetizing quite a bit. What you don't see behind the scenes is that a lot of companies will license or use OpenAI's engine, so to speak, in order to run AI protocols on their own websites or within their own apps. And those are called tokens. And I'll give you a very quick example of how I use OpenAI on my website. So right here, I have customer support in the bottom left-hand corner. And when you click right there, you can type questions. And I pay about $20 a month to a company called Chatbase. You can ask any question. And all of my closed captions for all my courses and thousands of these weekly webcasts are indexed right in here, so you can ask me questions directly. Yeah, but I don't think it's overvalued at all. I think that it's a great alternative to Google, which has a monster market cap, of course. I think one day OpenAI will have a larger market cap than Google. So Google currently owns the two biggest search engines in the world, which are Google and YouTube. And the Department of Justice is starting to crack down on them as well. You've seen all the news flow in the past week on how they might not be able to be the default exclusive browser within Safari, etc. And a lot of my students and many people on this webcast are using ChatGPT and not Google for searches anymore. I don't think it's overvalued by any means. Okay, and for those of you that use OpenAI, I want you to really try to focus on using ChatGPT's deep research product. Okay, it's a game changer. Let me show you very quickly. So you select ChatGPT 5 right here, you enter your prompt here, and then you're going to select deep research. And it can take 20 minutes to run, but it's an absolute game changer. It'll help your career, perhaps your portfolio, and your personal growth aspects of your life as well. Just try it out, please. All right, next question I've got is, are 20 stocks and 5 ETFs good numbers for portfolios? It all depends. I humbly recommend never having more than 5% of your portfolio in any one particular stock. So if you're going to have a stock portfolio from a risk management perspective, that means you have to have about 20 stocks or more. With ETFs, you can go a bit bigger, maybe 5 to 10%, if they're very liquid ETFs and safe ETFs, relatively speaking, like ticker VOO, which is one of my favorite ETFs, which represents the S&P 500. It's made by Vanguard and has very, very low fees as well. When I'm not sure where to put my money, I always put it in VOO. Do your research first, though, please. Next question is, what could crush Bitcoin temporarily? I would say interest rates. So if interest rates went up a lot, which could happen if there's inflation, then all speculative or more risky asset classes tend to go down. And I'll give you an example. So if you go back to around 1980, when inflation and interest rates were closer to 20%, everybody kept their money in the bank and bonds as well, because why would you bother investing in risky asset classes? And back then, there's hardly any IPOs. The stock market did terrible, and speculative investments did terrible as well. So that would really hurt Bitcoin. Now, I don't really care what happens with Bitcoin in the near term or the next couple of years. I don't care about the path. I care about the destination. And in my humble opinion, I believe that Bitcoin, at some point in my life, I don't know when, but at some point in my life will be $1 million per coin. Another thing that could materially hurt Bitcoin and cryptocurrencies in general is government regulation. Now, the Trump administration is very pro cryptocurrencies and Bitcoin and NFTs as well. And that's one of the many reasons Bitcoin is doing extraordinarily well, as are many other top tier cryptocurrencies. But if a government administration were to become less bullish on cryptocurrencies or overregulate them, that could be a negative thing. Now, cryptocurrencies, I believe, are the biggest threat to national security globally. And the reason I say that, and a lot of left-leaning countries or communist countries, I hate communism, that's right, but a lot of left-leaning countries, they make cryptocurrencies illegal because they're command economies. And let me give you an example to explain this in more detail. Okay, so if I'm the Federal Reserve or the Bank of China or the Bank of whatever country, the way that I change interest rates is as follows. You're all banks, okay? What I do is I sell you bonds, okay? You're going to buy bonds. And when you buy this bond, it's the Treasury, you buy this bond for me, okay? You give me money. I take this money, I put some of it out of circulation. When the supply of something goes down, the price goes up. So when the supply of money goes down, interest rates mean the price of money goes up. Now, let's assume that 99%, for argument's sake, 99% of banks and investors don't want to buy bonds anymore from the government. Okay? They want to put their money in cryptocurrencies. That's a big problem for governments. It's a big problem because what happens is a lot of times when governments get money by selling bonds, they take some of the money out of circulation and they use some of the money also to, make tanks, airplanes, defend the country, etc. If people want to use cryptocurrencies and not want to buy U.S. government bonds or government bonds from any country, then countries can't defend themselves. And that's why more left-leaning countries and communist countries tend to make cryptocurrencies illegal. Next question is, when do you invest in bonds? Yeah, so it all depends. If interest rates are high, you want to own bonds, okay, government bonds. And the lowest risk bond you can buy are U.S. government bonds, federal government bonds, not municipal. Municipal ones, you can lose every penny, which is what happened in Orange County about a decade ago. So the time to buy them really back up the truck is when interest rates are high, because the very last company on the planet to ever go bankrupt would be the U.S. government. Now, before you buy bonds, you want to do your investment research and make sure that the ratings agencies rate the bonds as AAA. And the ratings agencies include S&P, Fitch, and Moody's. And the way it works, generally speaking, is the highest rating is AAA, then AA, then A, and anything below A, you never want to touch. That's called a junk bond or a high yield bond. Now, you can have bonds in your portfolio right now if you're bullish on the equity markets and if interest rates are low. But I want it to be a smaller percent of your portfolio, and I'll explain. So what you want to do is take 100 minus your age. So let's say you're 20 years old. 100 minus 20 is 80. That means that 80% of your investment should be in riskier assets like growth stocks and maybe 20% in value-based investments or higher dividend yielding high-quality companies or bonds. And if you're 80 years old, 100 minus 80 is 20. That means 20% of your portfolio should be in growth or riskier stocks and 80% in low-risk stuff like government bonds. And the reason why it's higher when you get older is you just don't have as much time to make that money back. Next question is, which notable companies are in the industrial sector? Yeah, so Caterpillar, ticker CAT, Komatsu in Japan. You've also got any companies that make airplanes or defensive equipment such as Boeing, ticker BA, Lockheed Martin, ticker LMT, General Dynamics, etc. And these companies, the industrial ones in general, you don't want to buy them when the PE is low. What? The reason is you want to buy them when they don't have any earnings at all, the large cap ones, okay? Because they're very, very cyclical. And that's very dissimilar to other sectors where you invest based on PE. And if you want more information on that, I'm certainly happy to give you more details. Now, whenever you do investment research, and you're never going to rely on me or anybody to tell you what stocks to buy, what I want you to do is you can use my templates here. And there's 100 steps to investing in a company. So say you're doing investment research on Apple, for example, and this is dummy data. You do qualitative research first, quantitative, and then financial research down here, where you forecast your financial statements and value the companies yourself. I designed this based on my work experience, at Goldman Sachs and the hedge fund industries, venture capital, etc. If you're interested in getting a copy of this in order to value companies, to create your one-page reports or detailed reports, go to the link in the description of this video and set up a call with somebody on my team. But always do your own investment research. And it'll make you a longer-term investor as well. And so Warren Buffett, whenever he invests in a stock like Coca-Cola he bought around 1990, he always tells himself, I'm assuming the market's going to be closed for at least 10 years. Now, he knows the market won't be closed for 10 years, but that's how long-term focused he is. The longer the view, the wiser the intention. Please be a long-term investor. Day trading does not work. I promise you, this will serve you well. You'll sleep better at night, and your portfolio will be worth a fortune in the long run. So how much money, if you invest every single month in the S&P 500, can you be worth in 50 years? So I'm going to do a very quick exercise with you here, okay? Let's say, and I'm going to go over here to one of my templates. This is from my complete real estate course. Okay, this will be fun. So let's say that you invest $2,500 every single month in the S&P 500. And I know it's a lot of money. We can't do that much every month. I get it. And let's say you do that for 50 years. And let's say you think the S&P 500 will be up, 12% on average for the next 50 years. And I think the S&P 500 is going to be up about 15% on average for the next couple of decades. There's going to be big down years, but there'll be big up years as well. And one of the reasons I think that is because of AI. Companies are cutting expenses. All right, let's do the math here. You invest $2,500 a month for 50 years at 12.5% or 12% return. How much is that going to be worth? That's $97 million. Start saving now. And as Warren Buffett, coming back to Buffett again, he said, you want to spend what is left after saving instead of saving what is left after spending. And what you want to do is you want to have the money taken out of your paycheck every 2 weeks if you can. I know we can't always do it. And I want that to go directly into your retirement savings programs. For example, the United States 401k or IRA. Or in Canada, it could be a tax-free vehicle like RRSP. Yeah. And if you have more questions, let me know. And if you're in a country other than those two, just do a search for what is the 401k equivalent in your country name. Yeah. And the great thing is you don't pay taxes on that until you take the money out. Yeah. Next question is, do you think Buffett sits on a pile of cash and wants to wait for distressed assets to buy? Absolutely. Right now, he's got about $350 billion in cash as of his last filings. That's about 30% of his portfolio. And what he's been doing, he's been selling a lot of Bank of America, ticker BAC, as well as Apple, ticker AAPL. And so a lot of people are saying this is an ominous or a bearish sign. It could be. He also sold a lot of ETFs. He had 2 major ETFs for the S&P 500. So it's a bearish sign from his perspective, but I don't want you to just follow him. I want you to be long-term focused. And it's great to take advice from Buffett while he's still running Berkshire. The second he steps away later this year, don't take advice from whoever runs Berkshire. And the reason I say that is you never want to invest in a company, so to speak, including Berkshire, if the founder is no longer involved, meaning running the company. And I feel that way mainly with technology companies. If a founder leaves a tech company, run for the exits. For example, Jensen Huang, who's the brilliant CEO founder of Nvidia, if he left the company, I wouldn't own it. There's no way. What are you investing in? You're investing in people. Always invest in founders. I can provide more details on this if you want me to. Thank you. And of course, there's always exceptions. Okay. Next question is, there are only a few companies from Sequoia Cap's website that are public and they're well known. No, there's actually tons. So the way it works in venture capital is the top 10 venture capital companies in the world, many of which I partnered with before when I worked in VC, but the top 10 companies, VC companies in the world, only 1% of their portfolios are in what are called unicorns, which are companies that are worth $1 billion or more. That's how hard it is. Now, the number one venture capital company on the planet by a mile is Sequoia, and they have 5% of their investments in unicorns. They're the best venture capital firm in history. I partnered with them before. They led the A round on a company. My firm led the B round. I had a board seat. I sat down with the partners at Sequoia, and I'm going to give you some insights into how they do it in a minute. But first, I want to go to Sequoia's website and show you a couple things. I'll kick it off with their portfolio companies that have made a killing. Then I'm going to show you which AI companies to consider using and investing in, okay, directly from Sequoia's website. And my dad told me growing up, only take advice from successful people. So don't take advice from me, we'll take advice from Sequoia. So the first thing we're going to do together is we're going to go to sequoiacap.com. Okay, give me 1 second. All right. And on their website here, there's tons and tons of companies, if you look through, which where they've had massive exits. Okay, you click here on our companies. Okay, Figma, we all know the IPO is like 20 or 30 times oversubscribed. Nvidia, obviously a huge one. Apple, Reddit, the Reddit founder, and Williams lived around the corner from me for about 6 months last year. YouTube, Instacart, etc. Okay, so tons of these companies done incredibly well. All right, now before I tell you how Sequoia does incredibly well, I want to show you which AI companies to consider investing in or using per Sequoia. So what you can do, and you can just do a search for Generative AI Act 2 Sequoia. So let's take a look here. And they update this every now and then. So based on Sequoia's incredible research, these are the consumer AI companies to consider using or investing in if you possibly can at some point. Now, a lot of these are not pure plays, like TikTok's not a pure play. But you can take a look here. If you want to use avatar generators, you can use these products here, music here, etc. For enterprise, here's some examples here. So for example, Glean, this is kind of like Google to search within your enterprise using AI, but it indexes everything. You can look here at healthcare AI products, etc. If you're a prosumer, you can look down here at these here. And then if you're a techie, a developer, which I don't recommend being anymore, then what you can do is you can just scroll down here to see which apps you should use right here. Now, the reason I say you should not be a developer anymore is because AI was designed to replace developers. And Jensen Huang said this as well, the brilliant founder and CEO of Nvidia. He said, do not study computer science in university anymore. And he said it again because AI is replacing this. And I'm seeing lots of examples here in the Bay Area where I live. Facebook has let thousands, or Meta has let thousands of developers go. Amazon's done the same thing, etc. And it's mainly entry-level people that are being let go right now. So do not study computer science in school anymore. What Jensen Huang recommends doing is studying liberal arts. And I know it sounds strange, but liberal arts helps you to think creatively. In fact, Jensen Huang said that in the United States educational system will pass the rest of the world in the next couple decades. And the reason he said that, it's his opinion, the reason he said it is because the United States, unlike other countries, in the United States, you don't declare a major in school until maybe your second, third, or fourth year. Until then, you study the liberal arts. And it's no surprise that Steve Jobs, God bless him, used to always say that Apple lives at the intersection of technology and the liberal arts. It helps you to think creatively. Now, let me talk about Sequoia and why they're very successful. So I got to sit down with the partners for one-on-one meetings at Sequoia when I sat on a board of a company there many years ago. And I sat down with Doug Leone once for an hour and a half. We had a great conversation. And I'm going to butcher what he said. Okay? I just can't quote him perfectly. He's a brilliant man, way smarter than me. He speaks good to me. But I asked him, Doug, why are you so successful? Like, why is it that Sequoia has 5% of their investments in unicorn companies, unlike 1% of the other top 10 venture capital companies? And he said it all comes down to the management team. And when they choose to invest in hiring people or investing in people in their portfolio companies, they like to look for people that have something has perhaps happened to them earlier in their life. And that thing that happened to them makes them feel like maybe they're not good enough or they want to prove something to the world. And this is the type of person you want to hire and invest in. And the reason is because they have an unquenchable thirst for success to the extent that they will not sell their company for $1 million or $100 million or $100 billion. And I'll give you an example. So Elon Musk, and this is all publicly disclosed in the Walter Isaacson book on Musk, but Elon Musk growing up, poor guy, he had the crap kicked out of him a lot as a kid for being different. And so he wants to put his dent in the universe, prove the world wrong, and he'll never sell his companies. And there's many other people as well. Steve Jobs, with his upbringing as well, certain things happened that had him want to prove the world wrong. And there's a great book about this I want you all to read. It's not a religious thing, but it's called David and Goliath by Malcolm Gladwell. And what he says in that book, Malcolm Gladwell and David and Goliath, is that people who have been told there's something wrong with them growing up are usually way more successful because they have a chip on their shoulder and they want to work way, way harder than everybody else. Okay. And it happened to me too. Okay. Humbly. When I was in the 6th grade and the 8th grade, they wanted to fail me in school. They thought I had a learning disability. And they sent me, I remember it was Oakville, Ontario, Canada. They sent me to a place called Chisholm to take exams to see if I had a learning disability. And so for me, I have an axe to grind with teachers. And I will never sell this company. I get offers all the time for people to invest or buy my company. I want to prove the world wrong. I want to provide value to my students. I want to build up your confidence. Anyway, too much information about me, please. Yeah. They say those who can't do, teach. And those who can't teach, teach gym class. And I suck at sports. I'm just kidding. Well, actually, I'm not kidding. It is true that those who can't teach, teach gym class. Yeah, you know that's true. Okay, let's move on now. By the way, thank you, everybody, for your patience with me last week. I couldn't hold last week's Zoom call or weekly call here. I was at a funeral in Canada. A friend of mine, his son passed away for not wearing a helmet. I want everybody in this call, please, I'm begging you. If you see your niece, nephew, kids, whatever, anybody on the street that's on a motorized skateboard, e-bike, whatever it is, make sure they wear a helmet. It should be the law. All right, let me move on here. Thank you for letting me share that message with you. Okay, next question is, so are all the investors in OpenAI, ChatGPT's parent company, are all the investors hoping they can reach AGI? AGI means artificial general intelligence, which we're going to get in a couple of years. Artificial general intelligence means that AI is way smarter than human beings. So are all the investors hoping they can reach AGI and create a product based off of that in order to get a return on investment, or is it just waiting for their IPO? It depends. A lot of investors, if you're lucky enough to be an investor in OpenAI, when the IPO occurs, I'm sure a lot of people will keep it forever until the market cap is several $1 trillion, which it will reach at some point. Plus, there's hardly any investable AI companies. And that's why Nvidia's market cap is at nosebleed levels. That's right. Same thing with Palantir. There just aren't very many. So depending on the valuation for OpenAI when it goes public, and I expect Goldman Sachs and Morgan Stanley to do the IPO, if it's not in the trillions of dollars, I think it'll reach that pretty quickly. Now, the way it works in venture capital is when you invest in a startup and it goes public, you're not allowed to sell, and no insiders can sell for at least 6 months after the IPO. And that's called the IPO lockup. And that's why a lot of IPOs go down a lot after 6 months. For example, for me, when I worked in the venture capital industry, when my companies would go public, I don't care if they had a cure for cancer. I don't care how good the company was. I mean, I hope we cure cancer. I don't care how good the company is or was. I would sell a lot of my shares 6 months after because 98% of my net worth was in these companies. Okay. Next question is, if an owner has 5%, is that voting control enough? No, usually you need much, much more than that. And a lot of people that start companies, we do a case study in my programs on Facebook. I owned Facebook when it was private, my venture capital fund, and also when it was public, I participated in the IPO on the long and short side. But with Facebook, if you look at the cover, and this is meta now, but if you look at the cover of the S1 filing you can access at sec.gov, you'll see that Mark Zuckerberg, although he owns well under 50% of the company, he has and will always retain voting control, and it's written in this paragraph right here. So if you're worried about giving up voting control in your company, this is very hard to do, but you can set it up so you have all the voting shares so that when other people invest, you still have control. But generally speaking, usually you need more than 30 to 50% ownership in the company to get a board seat and to really be able to muscle the management team to make changes. And the best example I can give of this is Carl Icahn, who's a very aggressive hedge fund money manager. He's very successful. What he does every now and then is if he sees a company that's massively undervalued, he'll buy a massive stake, like 20, 30, 40% of the company. And then he'll join the board and he'll fire the management team or try to partner with other shareholders to do so and unlock shareholder value. So the best example of this is Carl Icahn did this with eBay many years ago. Nobody wanted to buy eBay. And the reason is because you're either a growth investor or a value investor, meaning you like stuff that grows a lot or stuff that's cheap and throws off a lot of cash. And eBay was both. So investors were confused. eBay had a growth component at the time, which was PayPal, which was expensive but growing fast. And it had a sleepy auctions business, which threw off a lot of cash because people use auctions sometimes more often in recessions. And so what Carl Icahn did was he bought a massive stake in the company. He fired John Donahoe, who's a CEO, really good guy. I met him a number of times, like 6'10" tall or something. And then he unlocked shareholder value by splitting the company in two. And investors loved it because PayPal, which was a separate company, he split up, and core eBay auction marketplace, they both went up a lot and were worth more separately instead of as independent companies. Next question is, if you want to sell a position when it reaches a certain level, do you put a sell order for the whole amount? Yeah, I'm usually pretty patient. I will do a sell order for the entire amount at an extreme price limit, right? So if my target price is $70 on a stock, what I might do is, if the stock is $68, I might just set a GTC good till completed order, limit order at $72. Yeah. Next question is, how long does it take you to make a full position 5% of your portfolio? You said you initially buy around 0.25%. That's right. Yeah. So after I do the due diligence investment research on my company, then what I do is I immediately buy 25 or 50 basis points. Okay. Then I hope it goes down. I know it's weird because I'm basically saying I hope I lose money. And I wait till it goes down a lot, and then I'll buy more and more and more till it's a 5% position. Yeah. And then I'll sit on it forever. Yeah. Unless it reaches the target price. And usually when I invest in companies, I try to invest in what are called 5x5s. And that means a 500% return within 5 years. Am I wrong? Most of the time. But if I'm a little bit right and it's only up a couple 100%, I'm usually happy. And the way that I do that is I write all my own investment research reports, and I provide my clients with this as well. I write all my own investment research reports, doing comprehensive investment analysis using these 100 steps. Okay. And then it comes up with a target price. This is dummy data. What I also do, and I just released this to my clients, is I'll do forensic financial statement analysis on a company. Okay. And a lot of people don't do this. But basically, you enter any company name and you select your AI prompt level right here. Okay. Then what you do is you answer tons of questions I give you using AI, right, to analyze the income statement, balance sheet, cash flow statement, and the footnotes. Footnotes are key, and most people don't understand what this means. And this will come up with a one-page executive summary as well as a 24-page detailed report as well. And if you don't have time to do investment research like this, then just buy ETFs, please. Yeah, never buy mutual funds because they are a scam. Mutual funds sometimes have fees of 3, 4, 5% or more. ETFs, it's usually, if you pick a good one that's liquid, usually the fees are less than 0.5% per year, which means less than 50 cents per $100 you invest per year. Next question is, do you always have a stop loss, let's say down 30%? I do. Before I look to invest in a stock, I look at risk versus reward. Okay? The risk is the downside. The reward is the upside. And of course, you want the risk, or you want the reward minus the risk to be very, very big. But usually I pick a technical floor. Okay. Now, I don't like technical analysis, but I do use it still. But you got to focus, number one, on fundamental, secondly, valuation, third, and distantly, third, technical analysis. So if a company breaches a support level, it could be a trend line, 50-day moving average, 200-day moving average, or a death cross, which means the 200-day goes down through the, or the 50 goes down through the 200-day. Then it might trigger a stop loss for me. Yeah, but every stock's a little bit different. All right, next question is Nvidia overpriced right now? Why not sell and buy later at a better price? Yeah, a couple reasons. So first of all, is it overpriced right now? So I don't care about valuation this year, next year, the year after. What I want you all to do is I want you to create your financial statements and forecast what you think net income is going to be in 5 or 10 years. Okay. Then I want you to value the company based on that. Don't look at this year's earnings or last year's or next year's. And who cares what Wall Street says? Create your own financial model, and I teach you all of that. Look in the description of this video to sign up for one of my programs, and I'll teach you. Now, the way to value a company the right way is this. You look at what earnings per share are going to be in 5 or 10 years. Then you value the company based on your target price in 5 or 10 years. Let me give you an example. So first of all, let's talk about valuation. So let's assume, this is very rough, that the average company in the S&P 500 trades at about 15 times earnings historically. And the average company in the S&P 500 has earnings growth rate of about 15%. Okay, so that's 15 times earnings divided by 15% is 1. So that means if companies in the S&P 500 have earnings growing at 20%, it probably means that stock will trade at 20 times earnings. And if companies in the S&P 500 have earnings growing at, say, 11%, then that means the price-earnings ratio is probably going to be 11 times for that. Now, with that being said, let's come back to Nvidia. So you forecast your financial model. And let's say between year 4 and year 5, you're forecasting 25% growth. So that, and let's say that in year 5, you have $1 in earnings. So that means that in 5 years, Nvidia, or whatever stock you're analyzing, should trade at 25 times that buck in earnings, or 25 times whatever earnings is. That's your target price. You buy it, you hold it, you don't sell it until it comes close to that target price, please. And every time you update your financial model every quarter, which is I teach you guys how to do based on my experience working in the hedge fund industry. But every time you update your financial model every single quarter, what happens is if the company keeps beating and raising every quarter, then of course your target price and your earnings estimates in 5 years is going to keep increasing as well. Okay. All right, next question is, in terms of, let's say you own Nvidia right now, why not sell it and buy at a better price later? The reason is, it could be because of taxes, right? So let's say you bought Nvidia and you made a 500% return. If it's in your retirement savings account, like a 401k in the United States, it's cool to sell it because you're not going to pay taxes unless you take the money out of the 401k. But let's say it's not in your 401k. Then if you sell it, you're going to pay a lot of taxes. So why would you not sell it? Well, the reason not to sell it is if your target price is much higher. And also a reason not to sell it is because of, let's just say, taxes. But let's say that 99% of your net worth is in Nvidia, and it shouldn't be. You should be diversified. 99% of your net worth is in Nvidia right now. But you don't want to sell it for tax reasons, okay? What do? How do you protect yourself? Well, you can buy a put. And I'll explain how this works. And a lot of people do this so they don't pay as much tax. So before I explain what a put is, let me use the analysis of life insurance. So the way life insurance works is you pay a small amount every single month, okay, like I do. And if I die, this is worth a lot. If I don't die, I lose this much. Hello, this is how much I lose. And I'm worth more dead than alive. Okay, good. Now we understand. Let's talk about puts with Nvidia. So with Nvidia, what you can do is you can buy a put for this much money between now and say year end, right, when you have to pay taxes. And if Nvidia goes down, this is worth a lot, okay? If Nvidia goes up, this is worth nothing. And the way to know if companies have options is as follows. Okay, I'll make this very quick. You go to finance.yahoo.com, okay? Then you're going to type in the ticker, which we know for Nvidia is NVDA. Then you're going to click on options here. And if you see data here, it means that the company has options. Okay, you're gonna select the strike price. Let's say you want to protect yourself until year end, and options usually expire on the last Thursday of third week of each month. So December 17th. Actually, let me do it this year. Sorry about that. Let's go to December of this year here. Okay. Then what you're gonna do, okay? And right now, Nvidia is at $170. You're gonna scroll down, okay? There's tons of options on Nvidia. This is unbelievable. Yeah, and I'm gonna show you how to value them in a second too, very quickly. But you're going to scroll down. I guess I can just do a search for the word put. There it is, puts. And you're going to select an option to buy here, okay? And this is the most liquid option on the planet, right? So what you're going to do is if you buy this here, and these are usually sold in lots of 100, that if Nvidia goes down below $170 between now and the end of December or whatever, then you're protected. Now, in order to understand how to price options and options from scratch, as part of my program, my services, I provide you with this spreadsheet. And in this spreadsheet, I teach you how to value and invest with 35 different options. Okay. And if you have questions about this, just let me know, please. Let me go to the next question now. So fun. When it comes to the IPOs, why don't ordinary investors have the same access to the initial price as institutional investors? Yeah. So the system is rigged to favor institutional investors. And I'll give you an example. Okay. So whenever an IPO occurs, a big firm like a Goldman Sachs or Morgan Stanley will underwrite the IPO. Okay, the investment bankers will underwrite. And other firms are involved as well. Then they have to decide who do they give the shares to. And whenever you see a trading floor on television, if it's not the New York Stock Exchange, it's often the trading floor of a big firm like Goldman Sachs, Morgan Stanley, UBS, etc. And the people on the trading floor, what they do is there's a lot of salespeople, and the salespeople will call their clients And one salesperson might represent the Boston area and call their clients, say Fidelity or Wellington or Putnam in Boston, and they'll sell this to them. Now, the reason that those big buy-side firms, mutual funds and hedge funds, get access to those shares is because they pay a lot of commissions to Goldman Sachs, Morgan Stanley, etc. So they have primary access. What about individual investors? Some of them get a little piece if they're a client of Goldman Sachs in their private wealth management division, for example. That's how it works. Everybody else, you might get access if you're on the friends and family list, which I've been for IPOs in the past. But everybody else, like retail investors, normal people like us, we usually don't get access to that, or it's very hard to. Yeah. Okay. Next question's from Alexander. Hey, Alexander. Who wrote, any course recommendations to master global macroeconomics indicators and economic indicators? Yeah, you can sign up for one of my programs if you want. So if you want, what you can do is set up a call with somebody on my team. So all you do is you go to harounventures.com, and at the bottom, it's tough to see because there's a black thing covering it, but you can click on book a meeting, set up a call with somebody on my team to see if our programs are right for you. And we've got finance boot camps, business boot camps, AI boot camps, and everything. Yeah, if there's something to teach, we teach it. All right, next question I've got here is, are born lucky able to concentrate in studies for so long, or do they do something to improve? Any recommendations to increase focus? Okay, yeah. All right, I'll explain to you how I improve my focus. Okay, so what I do is very different. I biohack a lot. Okay, so every single day what I do is, and this stuff works, but talk to a doctor if you want to, do your own research. Okay, take everything I'm telling you with a grain of salt. So I drink about 4 gallons of water per day. I put hydrogen pellets in here as well. It's my latest thing. Okay, do your research first, please. Gives me more energy, and then just some flavor. What I also do to help my focus is I take a lot of herbs, okay, and vitamins every single day. Okay, including Bacopa and other products I think will help me with my focus. Another thing I do to help improve my focus, since 2015, I've been having bulletproof coffee every single morning as my first meal. Okay, and this is prepared the night before. I have a coffee machine, a cheap one. It's a Ninja one. And what I do is I put coffee in here, and then I put MCT oil, a little bit. It's coconut oil, which really dramatically helps you improve your focus. Do not use MCT oil unless you do your research. If you do it, put a drop in initially, and then 2 drops, 3 drops, rinse out, repeat till it's a tablespoon. Now, what's also in here is a tablespoon of grass-fed organic butter. And people have been doing this for hundreds of years in their coffee and their tea, meaning putting butter. They've been doing it for hundreds of years to help improve their focus, retention, etc., so they can speak gooder and stuff. Okay. Then what I do is this. Every Sunday, I create 7 of these. And what's in this is every antioxidant you can possibly think of, okay? And I pressed my juice. Okay, I've got kale, I've got blueberries, I've got a lot of other stuff as well. So that helps me. What I also do to improve my focus, retention, etc., to help me speak gooder and stuff, is I have an Oura ring, okay? O-U-R-A, okay? It's a bit pricey, but I think it's worth it because I don't want to pay for health insurance and all that stuff, or massive amounts. Oh my God, it's not helping me speak good. But what I do is I monitor every single day my deep sleep, okay? And you got to get 7 to 8 hours sleep every single night. And when you sleep, when you go to bed, if you use your iPhone or Android handsets, you need to have blue blocking glasses. And the reason I say that, and I'm going to show you where to buy them, and I got this from a Stanford University sleep study when I was there. But the reason I say this is blue blocking glasses, and I'm going to show you how to find them in a second. They're cheap. They block blue light, okay, from your iPhone, Android device. And if you don't block blue light, then you will not get enough deep sleep. You'll get a lot of REM sleep, not enough deep sleep. And this will destroy you and limit your productivity and cap you in terms of what you can accomplish in life. Deep sleep repairs your brain at night. It repairs your muscles as well. And I'm going to show you that. And then I've got one more great biohack for you that has nothing to do with consumption. I'm going to show you in a second to help you retain more. So what you're going to do is you just go to, I'll go to Amazon.com, my orders. Hold on a second. Okay. And you can do a search on, that's my wife's stuff, glasses. blue blocking glasses, okay? And I'm going to show you exactly what to order here. Here it is here. Okay, good. So if you want, pause the video and take a screen print of this, okay? This here will block the blue light, which will help you sleep better at night, etc. All right, I lost a bunch of viewers, so let me go back into Big Chris mode. Last thing I'm going to share in terms of help to increase your focus is this. When I was younger, when I was in school, the first hour of each day studying was the most productive. And then at night, if I crammed for 10 hours, it wasn't as productive as the first hour of the day. And I realized this. If I was able to trick my brain into thinking I just woke up, then 10 hours at night is like 100 hours. I'm exaggerating. But what I do is this, okay? So here's the hack. So get one of these desks that goes up and down. They're relatively cheap on Amazon now. And get a treadmill, okay? And what I do is I get 20,000 steps a day. Plus I go to my garage to do, weights, elliptical trainer as well. Okay, and after a while, you don't even notice you're walking. And the reason I bring my desk up is so I can type as well. Now, when you do this, you have to wear your Apple Watch in your pocket, which is what I do, just to count my steps. So I find this helps me out materially in terms of being able to really focus on stuff. All right, let me try to focus on this call now. All right, and if anybody else has other hacks to help you focus better, etc., please drop them directly there in the chat. Yeah. Okay. Next question is, I've left my job to trade stocks and derivatives, but when I often try to research, I spend most of my time playing video games, and when trading comes, I sometimes even start gambling. Yeah. First of all, I say this with love in my heart, day trading does not work. And the reason it doesn't work is because every month has 20 days the markets are open, 20 weekdays. And the reason stocks go up and down is because of random crap we can't forecast, like what some politician might say. Or, I don't know, negative or positive earnings from a company, or economic data points, or tariff stuff, I don't know. And so you end up getting fooled by randomness. The worst thing you can do is your first day trade, you make money. Because that's like saying the first time you go to a casino, you make money. You think you can replicate, you cannot. Don't let the scammers tell you day trading works, okay? And if day trading did work, we would be able to name many billionaires who have been successful for decades day trading. It doesn't work. Be a long-term investor. Tell yourself, I don't care about the path of the stock. I care about the destination, meaning your target price. You'll sleep better at night as well. You'll be worth a hell of a lot more money too, and you'll save a lot of time. I promise you. Do not day trade. Okay. If you want to understand how to be a long-term investor, you can certainly take my courses or other people's courses as well. Yeah. Okay. There's nothing wrong with liking video games though, man. I love video games. Like a lot of people say, when I retire, I want to golf, right? I have a massive golf simulator in the garage. My kids play 500 different courses. I freaking hate the game. I love video games though. So when I retire, which will be never, I'll be playing video games. And when GTA 6 comes out next May, if it ever does, you all know that I ain't going to be here for at least a month. Okay. Man-child. I'm 7.5. All right, next thing Alexander wrote is, I earned some profit in derivatives by doing good predictions when I was in college, which is why I left my job. I'm really confused and also finding it difficult to research. Yeah, the only reason I think you should use options, meaning derivatives, and let me take a step back and explain derivatives really quickly. So the global derivatives market is 6 times bigger than the global stock market. It's massive. And derivatives means you're betting on the rate of change of something. And under the derivatives umbrella, you've got options, swaps, futures, forwards, and other derivative products. Remember derivatives, remember from calculus class, the rise over the run, derivatives? Betting on the rate of change. The only reason you should invest in derivatives, in my humble opinion as a retail investor, is to preserve capital, like buying puts, like I talked about before. Or you can buy calls. Now, before you buy calls, I want you to only buy leaps. Right? And what that means is calls that expire in 1, 2, sometimes 3 years. And the only time you should do it is after you do your own due diligence, investment research. So say you do a lot of research on a company and you think you've got 500% upside within 5 years. Then and only then should you buy calls. And you buy calls that expire in 1, 2, or 3 years. Those are called leaps. And I only want you to buy calls or buy puts. Don't ever sell them, meaning underwrite them, because your losses can be much, much more if you're randomly assigned, etc. Plus, the system is rigged because all these institutional investors that have thousands of brains on a stick, PhDs meaning, unlike me, I'm just a stick. What they do is they research options and they screw the rest of us when we buy them, because they understand the difference between what's called implied volatility and historical volatility. If you want, I have lots of courses on that stuff too. Yeah. Okay. I can't concentrate on stocks. I play video games and start watching something else. I can't brainstorm. I don't have the patience to sit down and just start. Yeah. So what I recommend doing also, in addition to what we talked about in terms of being able to focus, is always take one day off a week. Otherwise, you'll burn out and you won't be able to think good. So for a lot of people, and the 10 commandments, which are basically 10 rules, which a lot of people live by. One of the rules is to honor one day a week, meaning rest. And God knew, of course, he didn't have to rest, but he was trying to tell us you have to rest. So I take Sunday off every week, go to church, spend time with my family, my wife, my 3 kids who are older now. A lot of my clients, who are Hasidic will take off Saturday, and a lot of my clients that practice Islam will take Friday off. I don't care what religion we all practice. Take one day off a week, or you will burn out. I promise you. I promise you. And Monday is my most productive day of the week. I'm 3 times more productive than I am on Fridays because of that. It's an investment in you and your family. And what are we here for anyway? Spend time with family. Okay, next up. Hey, Peter, how are you? Peter wrote, real estate, kiss, marry, kill for you. Become a landlord, property flipper, investing in risks, ? Or in REITs, yeah. So what I would say is, only invest, if you want real estate exposure, I would only invest in REITs if you don't have enough money to put down 20% to invest in an investment property or your own property itself. Now, the way that REITs work, real estate investment trusts, they're kind of like mutual funds, which is, a collection of stuff. But REITs can be a collection of residential, commercial real estate. And by law, they have to pay out about 90% of their profits in the form of a dividend. And that's why REITs have high dividend yields. But I never want you to invest in any stock where the dividend yield is insanely high, because the market is saying it's not sustainable. Now, I always prefer the best investment you can make, aside from education, in my humble opinion. The best investment you can make is real estate, education, real estate, and then stocks. And the reason is because if you invest in real estate, you get a ton of tax deductions. You can rent out the place as well. And if you own it as an investment property, you can profit immensely by paying less taxes, by writing off what's called depreciation. The wealthiest families in the United States and globally own a ton of real estate. And one of the reasons is because they can depreciate the buildings on top of the real estate. Yeah, you can't depreciate land. For example, if you go back to 2016, the first televised debate between Hillary Clinton and Donald Trump. Hillary Clinton said, hey, Trump, it's not fair you're not paying taxes. And Trump said, well, of course I don't pay very much in taxes because I own real estate and I can depreciate. And so it's my goal that all of my clients, all my students, in 10 to 15 years, you make more money from your real estate investment holdings, okay, the houses you're going to rent out, than you do from your base salary. Let me show you very quickly. Okay, now before you invest in any real estate property, and I have a template for everything for my clients, what I want you to do is I want you to take this course, the complete real estate course, only available on my website. And you're going to enter in the place you want to buy. So this is one of the houses I own up in Canada here, okay? I ask you tons and tons of questions about it. I explain real estate from scratch. You answer tons of questions. You select the property you want to buy. I help you value it using 5 methodologies. Then I'll explain how the mortgage works. I'll make your income statement over as many periods as you want. Everything is automated for you. I create your balance sheet, cash flow statement, and then I give you tons of real estate formulas as well to help you understand if you should buy. And what comes out of this is a 1-pager, okay, executive summary, as well as a massive business plan, which is 27 pages as well. You can print out, which will explain the property you're considering buying. And when you take this course, you can either do the primary residence track, the residential investment rental track, commercial, or the all track. And if you have questions about that, let me know. Yeah. And for my clients that are in one of my programs, you go to my website to set up a call with somebody on my team. I do daily small group Zoom coaching meetings, right? So every single weekday. That's actually 7 hours per week. That equals 300 hours per year, okay? And then also you get over 500 hours of my humbly award-winning content, okay? Including my my unabridged MBA program on my website, which is only available on my website. And you get 10 hours of one-on-ones with me Mondays through Saturdays. So check it out. Go to the link in the description on this website, description of this video, and set up a call with some of my team if you're interested. Or just stay here and don't pay, and I'm happy to teach you based on my many mistakes. Yeah. All right. Next up, Naveed wrote, "Hey Chris, in simple terms, can you explain the difference between Bitcoin and Ethereum and which one has more potential upside in the next 5 years and why it's so?" Yeah. So I've disclosed this for many, many years, which cryptos I own and which ones I'm never, ever, ever selling. Okay. So, and do your own research first, please. I own Bitcoin, Litecoin, Ethereum, and Ripple. Bitcoin is my favorite out of all of those. And the reason I like Bitcoin more than Ethereum is because Bitcoin, there's a limit in terms of the supply. Okay, so there will never be more than 21 million Bitcoins on the planet by the year 2140, right? And you always want to invest in stuff where supply is not increasing, but demand is increasing. Let's now talk about Ethereum. Ethereum is a more secure and more flexible base crypto. And what Ethereum is used for is not just to invest in the coin itself, but also Ethereum is a platform. And most ICOs, which is like an IPO for cryptocurrencies, are done on the Ethereum platform. And on the Ethereum platform, you can also have secure contracts, do anything you want on that platform, NFTs, whatever. You can't do that with Bitcoin. The problem with Ethereum is this, though. There's no limit on supply, and that worries me. It's the biggest weakness in the business model, but I still like it longer term. But I do believe that Bitcoin will be a much, 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 much higher market cap than Ethereum in the long run. So I hope that answers your questions there. Yeah. Okay. And then Naveed wrote, "Shall we still keep crypto at 5% of our portfolio only based on its importance?" Yeah. I don't, cryptocurrencies, I've said this since day one. I don't want it to be more than 5% of your portfolio. The problem with cryptos, and look, I'm bullish, I've owned them for years. The problem with cryptos is this. Before you invest in an IPO or a stock, you read an investment offering memorandum and annual reports and quarterly reports and 8Ks, etc., available on sec.gov in the United States, for example. Cryptocurrencies, you don't have that. They're not regulated by governments. And I think there should be some loose government regulation in the United States. I would love the SEC, and it's going to come, I promise you. And when it comes, it's going to be very bullish. I would love the SEC to force companies that are going to sell cryptocurrencies in the United States to publish an S1. As of now, you can't get this. You get a 15-page white paper. Yeah. And Jamie Dimon, who I think is a brilliant CEO, he's going to be retiring soon from JP Morgan. But Jamie Dimon, even, and I respect him, he said, "How do we know that there's a limit on the supply of Bitcoin? Like, how can you prove that?" And a lot of people say you can with mathematics and reading the 15-page white paper. But he's right. You can't. And as a result, 5% is the limit that I recommend. Yeah. All right. Next up, Lingineer, first time I've seen you on the call. I hope you join us again. Welcome. Wrote, "What are some general questions analysts should always ask themselves when analyzing data?" Yeah. Woo. Well, when you're analyzing stocks, I always ask myself this before I start, and I'll get to the data side in a second. I always ask myself this. In 5 years, will this company be more relevant or less relevant than it is today? And that will help you from a data analysis perspective because it'll stop you from getting seduced into buying value traps, meaning stocks that are cheap for a reason. You can go back in time. You can look at Yahoo in, 2010 or something. In 5 years, will more people be using Yahoo or Google? Well, obviously Google. Same thing with Research in Motion, my beloved Canadian BlackBerry company, with respect to competing with Apple and Android when those products were released in 07, 08. Yeah. Now, when it comes to data analysis in general, you want to look at historical patterns always. okay? And you want to look at a regression analysis. Now, for my clients that sign up for my programs, I provide you with an Excel course where I teach you every single formula, icon, menu item, etc., and how to code with the Microsoft Excel. And some of the more basic ones which I teach are regression analysis, where you look for patterns in the data. For example, years ago when I was in the hedge fund industry, I would always do an analysis on behavioral finance, meaning insider buying and selling of stocks and how the stock performed. And I would meet with Bobby Kotick, who was the CEO, founder of Activision, with Microsoft now owns. And I found out by doing a regression analysis, which you can do in Excel, and regression analysis is a subset of machine learning, which is a subset of AI. But I found out doing a regression analysis, every time Bobby Kotick would buy stocks in size, the stock would be Activision size. Activision would be much higher a year later and vice versa. So I would look for historical patterns in the data using that, please. Yeah. And if you have follow-up questions or you want more granularity, please let me know. Thank you. Okay, but you without data, without analyzing data, you have an opinion, not a thesis. And that's why whenever we do research on companies, we spend most of our time doing financial data analysis, meaning forecasting financial statements based on historical trends. Yeah, and I can go into a lot more detail now if you want me to. Thanks. All right, next up, Ted. Hey, Ted, how are you? And then Ted always has good dad humor. He wrote, "Do you know how to make an egg roll? It's easy, just push." I like that. I like that. And when you meet me in real life, I'm a tiny man. Yeah. And for anybody that wants to come for my annual event here in the Bay Area, I'd love to meet with you, do one-on-ones with you as well. It's a 3-day event on September 27, 2029. There's a graduation ceremony for those graduating from my MBA program. There's massive networking events. And then I rented a badass bus with leather seats for us all to go up to Napa Valley together as I rented part of Francis Ford Coppola's vineyard. Let me show you guys if you guys want to come. So just go to my website, harounmba.com, and then go to customer login and then select this here. And this will provide you with more details. And if I went too fast, you just pause and rewind the video, please. All right, let me go to the next question. All right, la prochaine question est... All right, Chibike wrote, Saint Haroun. No, welcome to the house of Habibi. Thank you. What do you think of Google's antitrust court verdict? Yeah. And I mentioned this earlier today. You probably typed this question before I talked about it. I think it's the first of many. So it's astonishing how powerful American tech companies are. In previous decades, they would have been broken up. I remember back in 1999, the Department of Justice and Janet Reno, who's the Attorney General, tried to break up Microsoft. But now for national security reasons, I humbly believe, this is just my opinion, the United States government, specifically the DOJ, Department of Justice, has not tried to break up big tech for national security reasons. So it doesn't really make sense that Apple can charge 30% fee in its app store and destroy all innovation when it comes to games. Like, remember when you first got the iOS device, you were able to download a really cool game like, Where's My Water or Angry Birds and all that stuff. And then Apple started pushing their video game subscription product at you, and innovation has died. And innovation is great for the consumer, and competition is a great thing for the consumer. The government should break it up. They haven't yet. Same thing with Google. Okay, Google's a great company. I love it. But Google rebranded itself as Alphabet several years ago because they're smart. They know that eventually they're going to be broken up because Google owns the 2 biggest search engines in the world, Google and YouTube. Same thing with Facebook. Facebook used to be called Facebook. It rebranded themselves as Meta because they know it's only a matter of time until the Department of Justice breaks Meta up into multiple companies: Facebook, Instagram, WhatsApp, and other crap. Yes, crap. So it's only a matter of time. Now, the Department of Justice, what they've been doing with these aforementioned tech companies is, instead of breaking them up over the past couple of years, they have not allowed them to make big acquisitions. Have you noticed in the past couple of years, there's no monster acquisitions in the internet sector? Also, the government has blocked very, very tiny deals that Facebook tries to do in terms of, visor-based technology, etc. It's all publicly disclosed. But I think that this precedent set by the district courts recently with Apple is going to mean that Apple is not going to be able to, and Google is not be able to muscle their monopoly power to increase pricing to us while destroying innovation. Again, competition is a good thing for the consumer. Let me move on. Okay. Next up, Naveed wrote, what is better, buying a good crypto like Bitcoin or buying a crypto ETF or a company whose portfolio is basically crypto, MicroStrategy? Yeah, let me answer that in reverse order. So I met with Saylor, who's the founder of MicroStrategy. When I used to work in the hedge fund industry, we used to short his stock, and we called it MicroTragedy. I remember he used to get on earnings calls, and he didn't like the questions being asked by analysts, public earnings calls. And, halfway through the call, he'd say, I don't want to answer that question. I'm done here. He's abrasive, but I don't think it's right, just my opinion, that he take his software company and turn it into a crypto company. Yeah, you can make money on it. But the way it's supposed to work for big companies or tech companies is the only cash and short-term investments they should be really, really liquid, safe stuff like treasuries and cash and maybe commercial paper. Yeah, that's my humble opinion. In terms of crypto ETFs, I prefer crypto ETFs in general to investing in cryptos themselves. And the reason is, I had a great prop here. Damn it, Janet. Where is it? Can't find it. Okay, anyway. The reason is, when you use a cold storage wallet, okay, which I can't even find anymore because I don't use it anymore. But when you use a cold storage wallet to buy Bitcoin or cryptocurrencies, it is so complicated to set that thing up. So complicated that right before you buy the crypto, after you set up this thing, you cut your order in half because you're not confident in the process. Now, ETFs were created for Bitcoin and other cryptos recently. And that makes it easier for us to buy more and not worry about if this thing is going to work. So you buy it like a stock, which I love. And this is one of the reasons Bitcoin has ripped to the upside. Of course, there's policy decisions from the Trump administration that's helped as well. And the precedent I have for this is back in 2004, gold. If you want to buy gold before 2004, it was harder. But because you go and buy gold in some seedy part of town, maybe you pay cash for it. So when you sell it, you don't pay taxes. Don't do that. But you maybe pay cash for it, and you're not really sure if it's real gold. Then in 2004, and this is fake, just like me, I'm a fake teacher. In 2004, what happened was the GLD ETF was created. And the beautiful thing about that, it was very liquid. You knew it was real, and you can buy and sell as quickly as you wanted to. And that's happened with cryptocurrency. So to answer your question, I prefer to buy ETFs to invest in Bitcoin and cryptocurrencies now. Yeah. All right. All right. Next, Aporia wrote, it's another beautiful day, and I'm pleased to be sharing it with Chris and chat. Excellent. Thank you. Good to see you. I appreciate it. I love my job. And the way you know you have a passion and not a job is if you're on vacation and you can't wait to come back to work. I love spending time with my family. They come first, obviously, God, family, but I love this. Yeah. And the way you know you found your passion also is this. So if I give you 30 days off starting today, and the next 30 days you can't travel, you can't go to work, okay, you can't go to school, what are you going to do with your time? That is your passion, your purpose, your raison d'être, and that's what you should be doing, and let me help you do it. And my job is, and this is where I proposed to my wife in Paris 25 years ago. Man, time goes by, eh? But my job is, think of me as your waiter, okay? Now, when you go to a restaurant, you look at the whole menu. You choose one or two items to eat. But you look at everything. That's my job, is to expose you to every type of career in finance, every industry, your own company, etc. And whatever you're most passionate about, whatever you want to eat more, that is your job. I shouldn't say your job, your passion, your raison d'être. And it's my humble purpose to help you with that. I don't care how old people are or young they are, you can always change careers. The average life expectancy today is 26 years longer than it was in the 1950s. So if you're 53 like me, you're actually 27. You can start over. Yeah. Next question is from Tony Chen. Hey, Tony. Who wrote, What do you think will happen to logistics and delivery industry in the future? Will Amazon Go expand and take over most of the market share? Is UPS a broken stock, or should it be avoided? Yeah. It's tough because 5 years from now, I think we will be using more deliveries to our house. But I think some might be drone-based. UPS, I don't really see it as a great tech hardware company. I'm probably less bullish on UPS. I think Amazon will take share. I also think that from a delivery perspective, companies like Uber and Lyft are going to be taking a lot of share. You got Uber Eats right now. Why can't they deliver other stuff? They certainly can. And then Amazon, which I think the Department of Justice is going to break up in the next couple of years. Amazon has a monopoly. And what they can do is when you choose to buy something, they can, of course, favor their delivery system. I usually can't choose UPS, FedEx, whatever it is. Yeah. So I'm more bullish on Amazon than I am on UPS. Yeah. And it's hard. It's really, really hard for anybody in the logistics industry and retail industry to compete with Amazon. It's hard, especially because the profit margins are 1%, 2%, and 3%. This is why a lot of people don't start stores anymore. How do you compete with Amazon to undercut you in pricing? And you can't live off 1%, 2%, or 3% profit margins. Yeah. Okay. Manas, good to see you. Manas from Calcutta wrote, "Good morning, my dear mentor, Chris, please. After a million years, so glad to see your suit back. Thank you." Yeah. I wore a t-shirt past couple of weeks. Yeah. All right. Mr. Orange 86. First time seeing you on the call. Hope you join us again. Thank you. Question is, I'm a senior associate at a global law firm. I'm curious on your view on how law firms and other professional service companies can adapt to AI. Is billable hours a thing of the past? Yeah. I think that law firms, investment banks, and equity research roles, the number of roles will decline, but the productivity per person will go up materially, leveraging AI. Yeah. So you all have to embrace AI now before somebody else figures out how to embrace it and be more productive than you. Try to disrupt yourself too. Look at what Reed Hastings did from Netflix. So Netflix initially was a DVD rental service. You get DVDs in the mail. And he knew, I think it was around 08, 07 or so, that eventually, thinking out 5-10 years, people would probably be streaming that stuff. So he disrupted his own business model before the marketplace did. Blockbuster should have done that too. By the same token, I want you to do the same thing. I want you to leverage using AI products to enhance your career so you can be way more productive than your peers. Be competitive with them. And the best way to do that, if you want, there's tons of apps you can download or websites that use OpenAI token systems. Or you can just go to deep research and start there. Yeah. And I use a ton of AI as well. A ton of AI. And I outsource a lot of stuff as well. So a lot of the administrative stuff in my company, I outsource to the Philippines. And I pay $1.50 per hour for the entire team in the Philippines. That helps me. A lot of other stuff I use AI for as well. And all my employees use AI a lot. So my employees are, I believe, twice as productive as they were a year ago. That drops right to the bottom line for me. That's why I'm bullish on the S&P 500 in the long run. A lot of companies are using and will be using AI to cut expenses, which will drop directly to the bottom line. And the next step is for them to massively increase and accelerate revenue growth if they can using AI as well. Yeah. Okay. And Alexander wrote, I think science students tend to be highly competent, like you. Oh, thank you. Thank you. Business subjects are easy for science students. Science opens your mind like no other. Yeah. Well, it's so interesting you say that. Thank you for the compliment. I don't know how competent I am, but we used to say in Silicon Valley when I worked in venture capital, it's always easier to teach finance to an engineer, which is kind of sciencey, than it is to teach engineering to a finance person. Yeah. Okay. And then Manas wrote, you said something about Elon. He has amalgamated X and XAI. Combined company is worth way too low what he paid for X. Yeah. Whatever he paid for it was a 40 billion or something. I think it's a rounding error. If you think about it, like Twitter should be the most valuable media company on the planet. Like, why can't Twitter be worth $1 trillion? Why not? Yeah. I think he might sell it one day and make a killing. But I only think he'll sell it if he's having cash flow problems. Otherwise, for his own personal ethical reasons, he won't sell it. Yeah. And I certainly, without revealing my political preference, and I did not vote in the last election. I don't support either candidate. But I kind of like how the woke mind virus stuff is going away. And I think he played a small part in that too. Yeah. Okay. You're most welcome for that next comment you left there, Mr. Orange. Thank you. Manas wrote, at the end of the day, OpenAI and Anthropic are LLMs, which stands for large language models. They are useful, but an LLM, when will we reach AGI and how? Yeah, I think AGI will come within 5 to 10 years, probably within 5 years. Yeah. In terms of how, because there's so much money going into the space. Look at how much money OpenAI has raised. And when they go public, they're going to get primary and secondary shares. Okay. Secondary shares means the people, when they go public, OpenAI, means the venture capitalists will be able to cash out. And, some of the founders and employees will be able to cash out as well. But they'll also issue primary shares. And primary shares means brand new shares, and the use of proceeds will to get to AGI faster. Yeah. And I think it might end up being the biggest IPO of all time. It has to be. Because everybody wants a slice of AI. And as I mentioned earlier in this call, the only way to really invest in pure play AI to a certain extent is perhaps Nvidia and Palantir if you want, if you want liquidity. And that's why people believe those two companies are overvalued. Yeah. There's an unquenchable thirst from the marketplace to invest in publicly traded liquid AI companies. Yeah. All right, next up, pardon me, what are the best finance movies you reviewed on your channel? Yeah, thank you. I've taught basically everything in business, tech, social media, etc., which is why the next thing I'm doing is doing movies. So I just published, or I just finished editing this one here. Okay, this is Wall Street Money Never Sleeps. It's part 2 to this one. I did this one several years ago. This will drop, I think it will drop next week at the latest on my channel. I really love this one. My favorite one I did was probably Margin Call. Just because I love the acting in that movie, and it's really underrated, and it's realistic because it represents Lehman Brothers. Yeah, and if you guys want to check, I'll show you. So we do shorts every single day, and I'm going to show you, and I'll tell you my YouTube strategy and what you can do with your YouTube strategy as well to get access to customers, etc. Longer term. Oh, that's new. Look at that. All right. So yeah, what I do is I publish, and I'll go here in my home here. Just go down here to this Wall Street Pro Humbly Rex to Finance Movies, right? So I do it every couple weeks or so, a different movie, okay? And there's many more as well. This here was my favorite one, okay? A Margin Call, and then you have to watch an ad first, sorry. But what I do also, and you're allowed to do this, by the way, for educational purposes. So you can show video clips up to, 13 seconds or so. And it can just be educational. Okay. So this here is my favorite one. And somebody commented in the chat that this here is AI. That's not. I actually bought that shirt on eBay. But what you can also do is we clip from this YouTube Shorts. Okay. And we publish a short every single day. So this was just published, I guess, a couple minutes ago, this guy here. Okay. And by the way, this here is a poster that when I worked in venture capital, somebody sent to me in my venture capital office. And what I cropped off was Chris Haroun wanted for an investor meeting. They got a meeting with me. They got my attention. I didn't invest though. But you want to repurpose all of your content. And YouTube is the only gold rush in history where it costs you nothing to make the product. This cost me nothing. And YouTube is the only gold rush in history where you can get access to potentially billions or millions of potential customers for free. There's a race on now. You all have to start creating your own content immediately, whether it's YouTube, Instagram, TikTok, etc. Because if you don't do it within a couple years, AGI will do it for you, and you won't be able to establish the brand of you. And I think in 5 to 10 years, a lot of movies we're going to be watching will be with movie stars that don't exist. Create the brand of you. It's a land grab. Do it now. It's simple. You can take my program and explain how to do it, or just start creating your videos. And don't try to be perfect, guys. Okay? If you strive for perfection, you'll never reach it. Salvador Dali said that. Put yourself out there. And you will get criticized, but that's a good thing, because unjustified criticism is a disguised compliment. I gotta say that again. Unjustified criticism is a disguised compliment. So when some corporate bully at your job bullies you at work, in your mind say, thank you, you pretentious, shallow prick. But what I do from a repurposing perspective, I learned this from Gary Vaynerchuk. What I do is every week you watch this webcast, yeah? And you'll see if you go to the description of the webcast the day after I record it live, there's a lot of questions and they're time-stamped. And my team will repurpose the best questions asked directly on different social media channels, videos, etc. Just like how I repurpose all of these things I do here. Now, the next thing I'm doing, the next vlog I'm releasing after the Wall Street one is Suits. So I'm going to do one video on every season of Suits. And I'm just going to talk about the finance business stuff from this. And then after that, I'm going to be doing Succession as well, which is probably one of the best series I've ever seen. And this is awful humor. You know my humor. I had this on my desk like this, see here? And I was doing a call with one of my clients. And the dude said, Chris, why do you have sluts on your desk? And I said, no, it's Suits. Sorry. Okay. All right, next question is from Alexandra, who wrote, I think investment banker, sorry, I misread that. I think investment banker has to make both promoters and investors happy. He can't overvalue and undervalue IPO. What happens when an IPO is oversubscribed to investment banker? What promoters? Okay, yeah. So let me talk about IPOs very quickly. Okay, so Figma went public not too long ago. And the investment bankers made the mistake. They made the mistake of undervaluing the IPO. And as a result, it was over 30 times oversubscribed. Now, why does an IPO go up on day one 30%? Well, if it wasn't underpriced slightly, meaning by 30%, then why would any investor buy it on day one, right? So typically, the magic number for stock jumps, I'll explain this in a second. The magic number for investment banking stock jumps is 30%. So usually IPOs are underpriced by 30%. Okay, there's got to be incentive for you to invest, right? So that's the underwriting IPO business bankers do. The other business bankers do is M&A. And when one company buys another company, it's usually for a 30% premium. Yeah, just the going rate. It is what it is. Yeah. And if you have more questions about that, please let me know. Yeah. But if a stock jumps way more than 30%, say it jumps 5,000% in day one, then people that own the shares are happy, of course, including insiders and employees. But the corporate finance team at the underlying company going public is pissed off. And they're pissed off because they only got a certain amount of cash. Right? So when you do an IPO, company gets cash. The company would rather collect cash, meaning primary shares, at a higher valuation than lower. So a stock ideally shouldn't, spike more or less than 30%. And if that wasn't crystal clear, let me know, please. Thank you. Okay. Next question is from Manos, which is, imagine I put in $100. And of it, 60% is a 5-bagger and the rest is down 40%. Is that a good thing or a bad thing? How do you see it? Yeah. Let's make this simple. Let's make it 50-50. Okay. And let's say you invest $2. Okay. $1 goes up 6 times. Okay. $1 goes up 5 times. So now you got $5. And the other dollar goes down 50 cents. So you have $5.50. So you invested $2 and you have $5.50. I say it's a pretty good return. Okay. All right, next up, and in terms of a good point Aqua wrote, depends on the time frame. Yeah, I was just assume it's 1 year or even 5 years. Doesn't matter. It's a great return. All right, next up, Tony 2 times. Say hello, my little friend. Wrote, hey, Chris, long time. It's been a while. Hope you're doing well, T. You wrote here, you said buy 25 basis points when you first started to buy a stock. Yes. And continue buying until it's 5% of your portfolio. But do you continue buying even if it's going up in price, or are you only buying to average down? Usually to average down, right? Like, I love investing in broken stocks, but not broken companies. What does that mean? I get excited when I do investment research on a company and I see the stock is falling materially and it feels like you're catching a falling knife. That is my favorite time to start accumulating or adding to a position or initiating a position as well. Why? Because nobody else is. And if you buy the same stock that everybody owns, think about it. There's not that many incremental investors to push it higher. And being a proud Canadian, I have to quote Wayne Gretzky, who's the greatest athlete of all time. Okay. So Wayne Gretzky used to say he was successful, not because he skates to where the puck is, but because he skates to where the puck is going to be. By the same token, I want you to invest in companies people are going to like. Okay. And a company that people are going to like could be one that's materially undervalued, or it could be one where there's a couple of big catalysts coming up. Look at that angle. How cool is that? I love hockey. Yeah. So, for example, in early 2012, I invested in the firm I was at. We invested in Lionsgate Film, ticker LGF, and the brilliant man at the fund I worked at, Brian Carter, came up with this idea. And the reason we invested in LGF, meaning Lionsgate Film, is because we just read the Hunger Games books, and Lionsgate Film said we're going to come out with 3 Hunger Games books over the next 3 or 4 or 5 years, whatever it is. They came out with 4 eventually. And so that was a catalyst, a reason to get people excited in the stock every year or two when it came out, that movie. So you want to buy stocks that people are going to like. And that's why I always like you guys to ask yourselves before you invest in a company, in 5 years, will this company be more relevant or less relevant than it is today? Yeah. All right. Manas wrote, you were so right about Figma stock. It's sinking to a P of negative 4.3. Stock's down 50% since the IPO lockup period. Going to erode more value. What are your thoughts? Yeah. So what I would do, and I don't remember making the right call on that, by the way, and that's not something I would do. I usually don't tell people what to buy, etc. I teach my investors how to fish. If I give you a fish eat for a day, if I teach you how to fish eat for a lifetime. Yeah. You're going to have to create. So here's what I would do, Manas, and you're one of my premium customers. What I want you to do is I want you to go to EMS 4-3. That's Economics Management and Strategy, Semester 4, Class 3. And I want you to download this, okay? And on every tab, there's a video explaining how each tab works. And I want you to value Figma based on your forecast in 5 years, okay? Do that, and then during our Zoom calls, we do a lot together. I'm happy to take a look and give you my humble thoughts on your financial model, kind of like a model review, like my boss used to do for me when I worked when I was a grunt in the hedge fund industry. Yeah. Yeah. Aqua wrote, you really should avoid putting more than 10% in any position, even if it's high conviction. Yeah, that's how I run money too. Yeah. Yeah. Unless it's like an ETF, like the S&P 500. Yeah. Yeah. And I usually don't sit in cash, but if I'm not sure where to put something, I usually just throw it in ticker VOO. Yeah. Okay. And then Manas, that question you asked, ask me about that during our Zoom call, starting in about a half an hour. I can go through that with you. Thanks. Okay. Oh, Alexandra wrote, what does that mean? Somebody here, the Queen of Insights, is showing green on your chat saying, welcome to 5 free courses. Yeah, I think you can buy stuff from my website or maybe subscribe to stuff as well. Just go to the About section of my YouTube channel if you want. Yeah. Okay, next up, my Saeed. It's been a while. How are you, man? Great to see I missed you. You wrote, "Hi, Chris. I'm a Haroun MBA student in 2020, the very first ever launch." Thank you. That's right. We launched it in 2019, and then you graduated in 2020. Dude, that was a crazy year. You remember that? And our class bonded so much together. I've done 11 classes since then, and I remember in 2020 when COVID occurred, and everybody had to stay home. Everyone was bored in the house board. And I felt so bad because my business picked up materially that I told all of my students that year, yourself included, I think, don't make any more payments. You get it for free. And then what I did was I made all my courses online free as well, just to keep people at home and to do something. I didn't want to profit from that crap. And I remember the VP of engineering called me at home from Udemy, which is one of the many websites where I sell my stuff, called me and said, "Chris, can you please not do that?" I was like, "Why? I don't want to profit from this." He was like, No. Like, for example, Chris, 100,000 people within less than an hour signed up in Egypt for your courses you're giving away for free. And we want to make sure it doesn't hurt our servers. And because of that, what Udemy did was they created a new rule that only a certain number of people can redeem coupons and stuff. Yeah. Oh my God, I talk a lot. Okay, but great to see you again. Yeah. And then Maz wrote, "I'm interested in finance boot camp, but I can't access it. Please help." That's a separate product. Yeah, so that's not something that legacy clients get for free. If you want, go to the description of this webcast and set up a call, and somebody in my sales team can walk you through that. Thank you. Okay. All right, next up, Ruth wrote, "I appreciate this channel information, and this guy is what this guy is doing, period. Appreciate this." Thank you, Ruth. Appreciate that. Appreciate it. It's fun. All right. Next up, Alexandra wrote, "Is there a financial instrument that is so complex that common people don't know?" Oh yeah, there's tons. And what I always say is that if something is very, very complicated, just don't invest, right? So if you can't, when I used to work I worked at a hedge fund called Citadel years ago, and my boss used to always say, if you can't explain it, you don't understand it. And if you don't understand it, don't invest. So, like, for example, when you buy insurance, like, a lot of people will be scammed, that's right, into buying stocks through insurance companies. It's so complicated. But when it's complicated, there's hidden fees. So what you got to do is this. You got to call up whatever company is selling you a financial product. You call them up, right? And every call is recorded for quality assurance purposes. And what you do is you say this to the customer service rep. "Okay, I'm going to try to explain back to you what the fees are. So for every $1 that I invest, I'm paying 27 pennies in fees every year? No? Okay, let me explain it again then. For every $1, like, do crap like that. Okay, every call is recorded for legal reasons. All right, the power just went out in my house. All my backup generators just kicked in. I think we're okay for a bit. Okay, good. And I've got Starlink. We just switched over to Starlink right now on my roof, which doesn't require any power except for my generator. We're good. Okay. Every click you hear is power. There we go again. Okay. Okay, next question is, oh my God, Carson Levitt. Oh my God, Carson just wrote, "Really big fan of your content, Chris. I like the comment about Citadel. I'm Carson's son." Excellent. Oh my God, that's so awesome. Carson, so Carson Levitt, your father, is the reason why I do what I do and why I live where I live. So Carson Levitt, your father, started the equities division at Citadel in Chicago. And it was in July of 2004 that I flew in for interviews there with Carson. And I had a long interview with him, and he changed my life by hiring me. He also hired me at Pequot as well. I learned everything about finance from your father. God bless you. Thank you as well. Tell you what, set up a call with me. Send me an email at support@harounventures.com. I want to talk to you as well. Your dad was George Soros' right-hand man as well in the late 1990s. And your dad did this. This is an unbelievable story. He joined Soros Fund Management in the summer of 1999. And George Soros was down 15% that year. Your dad got them back to break even by December 1st, 1999. Then your dad made $1 billion in one stock in 1 month and got them to up 15% in the year. And that stock was Qualcomm. Yeah. I've learned everything in my career from your father. God bless you. When you see your dad, please give him a big hug for me as well. Yeah. And he wrote the intro in my latest book as well, which I think you have a copy of. I sent 2 to your dad. Yeah. Awesome. Thank you. And what your dad used to do was this. Whenever I pitched a stock to him, I think it was 06, 07, I pitched Boeing to him at one point, right? And he would look at the stock's chart, right? He'd keep it simple. And let's say the stock chart looked like this. He would say to me, Chris, are things better for the stock now than they were back then, or the same? And if I said, well, the same, he'd say, well, why can't we revisit this level? And of course, he asked me much more technical questions as well. But I learned a lot. Yeah. Thank you. And you wrote, he loved your book too. Thank you. God bless you. Again, give him a big hug and thank him for everything I do. The reason I'm on the West Coast is because of him. Thanks. Thank you. Small world. Okay, let's find out where I was in the questions. Give me a second here, guys. Thanks. Okay. Next question is, what do you think a company is buying Ethereum and Bitcoin for treasury following MicroStrategy? I mean, your MicroStrategy, when prices pop down. Yeah. I don't agree with it. Yeah. I think that on companies' balance sheets, they have to preserve cash. Without cash, they can't run their companies. So what they should do with cash is keep it in, treasuries, and short-term investments. Very low risk. Yeah, that's just my humble opinion. Yeah. Okay. Give me 1 second. What is the point of pushing friendly nations like India into China's lap forever? You saw China's summit. Didn't you know China, India, and Russia are on the same page? Do you think 3 nations will affect global power change? Yeah. So what China is doing, it's kind of unprecedented. And you can look on Truth Social if you want to follow what Trump says. It doesn't matter if you're a Democrat or Republican. But he said, we love the people of China. But we see that the political leaders of China, Russia, and North Korea are conspiring against America now. Yeah. So I still think innovation is going to come out of America in the long run. And love or hate Trump, we can all agree he gets a deal done. He's extreme. So usually when 2 people negotiate, party A says, I want this, party B says, I want this, and they meet here. Trump's a bit different. Party A says this, Trump says, I want this, and they meet closer to what he wants. Okay, and this guy got the city of New York to put hundreds of millions of dollars into a big hotel. He didn't pay a penny for it, and he made a fortune off it. He can get a deal done, this guy. Love him or hate him, he gets a deal done. And I think we're going to look back upon what he's done with tariffs 20 or 30 years from now and said it was a brilliant thing. I know that's controversial, but I think something positive is going to come out of this for the United States longer term. Yeah. And China has more to lose than the United States does. Why is that? Because China is more dependent on the United States and vice versa. And the Chinese economy, it has to grow every year. Otherwise, there's a massive uprising to the extent that what we saw in 1989 with Tiananmen Square is a rounding error. Yeah. So he's got them. And you know what? My dad taught me years ago. He said, don't focus on what Trump says. Focus on what he does. Yeah. All right. But a lot of it is posturing too, Mouse. Like, all these political leaders meeting, in China, trying to gang up on the U.S. A lot of it is posturing, right? It's kind of signaling something. Kind of like how the other day in China, they had the biggest military parade they've ever had before. It's just kind of showing force to the world. It's posturing. It doesn't mean anything. Kind of like how the United States has, 7 or 8 ships and nuclear submarine off the coast of Venezuela. It's just posturing. Yeah, a show of force. Okay. Next question is, you said day trading is bad, but do you say the same about options trading, isn't as simple as leaps or swing trading with options? So trading means buying and selling within, say, a month or two or something. Okay. When it comes to options, you can buy puts to protect you for a certain amount of time. That's not trading, that's protection, it's insurance. When it comes to leaps, you buy the calls that expire in 1, 2, or 3 years. That's long term. Yeah. Okay. Alexandra wrote, and I read every question here, has Trump confused you in terms of macroeconomics? As now, I'm really confused what will happen. I'm finding it hard to predict stocks. Is it the same for you? It was easier in 2024. Yeah. So don't ever think of the short term. Like, a lot of people lost their shirts back in April this year when the Trump tariffs were first announced and the market crashed. And the VIX went above 60 and almost got to my threshold of 70, which means buy no matter what, I don't care. Think long term. Ignore everything in between. Always tell yourself this: I don't know the path, but I know the destination. I don't care what a politician says. I care about my earnings estimates for a company in 5 or 10 years. Everything in between, I don't give a damn about. Yeah. Be long-term focused. Yeah. Okay. Next up, Anything wrote, hey, Chris, what is one of the most valuable skills in the world you would say someone needs to work on? Yeah. Networking. The most successful people in the world are great at networking and sales. The best entrepreneurs, partners in law firms and venture capital firms, as well as CEOs, what they all have in common is they can sell. So learning how to sell and network, and that's something I teach you in my programs. Go to the link in the description of this video, set up a call with somebody on my team. Now, what I found is that when I graduated from Columbia with an MBA in finance in the year 2008, million years ago, I was kind of upset, man. The most important skills they didn't teach me in business. In business school, they don't teach you the following, okay? How to network, how to sell. That's important, right? How to market yourself, how to manage your own money. They teach you how to manage other people's money, how to present. That's important, right? They also don't teach you how to start a business. That's right. Ask anybody that graduated from business school. So do you know how to start a business now? A little bit ridiculous, right? They teach you theoretical crap. And that's why I do what I do. Yeah. Okay. Next, X Capital wrote, and by the way, some people might respond, I don't answer to certain questions. If you paste a hyperlink or type in a hyperlink, Google doesn't allow that to come to me. YouTube, for some reason, I don't know why. Also certain swear words and other things as well. Yeah. Okay, so X Capital wrote, I'm so passionate about trading and stock market in general. But the thing is, right now, I'm in economics and I want to try trading. How can I see if this is going to work for me? Don't do it. Now, if you want to do trading, which is like saying, I want to go to a casino. If you want to do trading, I recommend this, okay? Have a pretend portfolio, okay? Create it on some website or use Excel, hell, or Google Sheets. Do it for 6 months and see if you make money. If you make money monthly and you're happy with the returns, maybe consider it. You'll find you won't, okay? And I say it with love in my heart. And make sure you have, if you can, no more than 5% in any one position, okay? And if you do make money, make sure you outperform the S&P 500. If you don't, it's not worthwhile. Yeah. Okay. And then you wrote also, there are times when I take initiative to do something, but then it gets held back because it's too hard, eventually leading me to do nothing. How do you handle such a scenario? Yeah. So a couple things. So when you come up with a goal, okay, and I'm going to use a prop for this. Let me use my treadmill, okay? Let's say you come up with this incredible goal, okay? You want to accomplish something in 5 years. When you set your goal, at first you're like, oh my God, this is great. My goal is the top of the mountain. Oh my God, it's getting bigger. I'm getting closer to it. Okay, I'm going to hurry up now. Oh, dude, it's getting closer. This is so awesome. And then all of a sudden, after a couple of years or a while working on the goal, you slow down. And I can't see the top of the mountain anymore. WTF, why the face? And so you start meandering this way, and maybe you stop. And you give up. But one thing you don't realize is that you are getting closer to the top of the mountain, your goal. It's just you're halfway up it, you can't see it. So here's what I want you to do. With my clients, I give them this one pager, okay? And there's accountability where I check in with you all the time, daily even for a lot of my clients. And every single day, you're gonna write down your goals and put a deadline date. If you don't set a deadline date for your goal, it won't happen. And Elon Musk, he said, if you set a deadline date of 3 years, you'll get it done in 3 years. But if you set a deadline date of 3 months, you'll get it done in 3 months. So you're going to write a deadline date, okay? Another thing you're going to do is you're going to document your goals daily on this one pager. And I learned this from Tony Robbins, who actually, the reason I do what I do, one of the reasons, is because about a decade ago, I met Tony Robbins. I introduced him to one of my portfolio companies in venture capital, and he convinced me to quit and start teaching. So it's because of him as well. But Carson Levitt had more of an impact on me. So what I have you do in my program is I have you write down your daily schedule every day, okay? The night before. And if you want to get something done, give it to a busy person. So the night before, you're going to write down all your goals. Then at the end of each day, before you write down tomorrow's schedule, you're going to score yourself. Now, you'll take 10% off for not working out, and you do have time to work out. That's right. You'll take 10% off because you didn't find time to, I don't know, hang out with your wife, whatever. Or you take off 10% because you didn't pray, or whatever's important to you. Or take off 10% because you didn't get closer when your goal, so you were down at the top. This works. Okay. So write down your goals daily. And it's really interesting. Tony Robbins said that the reason 90% of people give up their New Year's resolutions by the 3rd week of January is because they don't set a deadline date. Set a deadline date. What you can also do with your goals is you can vocalize your goals. Tell people you trust about your goals. And so when I was writing my first book years ago, this one here, I remember telling my family, yeah, I'm writing a book, and all my friends. That was a goal, right? And then what would happen is, I'd meet my family for Thanksgiving, and they would say, pass the turkey, how's your book coming along? Oh, damn it. I got to get it done. Vocalize your goal as well. Set a deadline date as well. I hope that helps. Yeah. All right. And what I want you all to do is this. So I talked about repurposing content before. I want you guys to all write one article every single week on LinkedIn. Okay? Every week. Then what I want you to do is I want you to do that for 2 years like I did. Then I want you to take all those articles and put it together in a book. Then when you go to your informational meetings, interviews, etc., you give this book. Costs you nothing to make this. And I can give you guys a template for this book for free in a second. I don't ask for your email address or nothing. Okay? Who does that? Meaning, who writes a book? And if you think it's too much work, I ask you this, and I say this with love of my heart. How badly do you want that job? So what chapters do you put first in the book? You put the ones that get the most likes, comments, etc. on LinkedIn. Repurpose content. And then each one of these chapters here in this book, I made into a video on YouTube. And then each one of these chapters I made into a course. Repurpose everything like Gary Vaynerchuk does. Let me show you how to access the book template right now. All right. So what you're going to do is you're going to go right here to, let's go here. Go to harounventures.com/writebook. Okay. And you can take a screenshot here if you want to access it. Okay. And you're going to click here. You'll go to Dropbox. You'll be able to download the template. If you know how to use Microsoft Word in a browser, you can do this. Okay. So it's got 1 page of instructions right here. Okay. And the 1 page tells you how to publish for free on Kindle, Amazon Print, like I just showed you, as well as Audible, which is ACX. And then you can pay somebody now $10 or $20 to make the cover for you. Use this dude here from Bangladesh. I've been working with her for years. She's great if you want. Okay. Then what you're going to do is you're going to just fill all the stuff in for each chapter and then right click here in Word to repaginate. That's a word. And then you're done. You're done. Yeah. And I want you all to write one article every single week on LinkedIn on whatever you're most passionate about. And the importance of doing this is you'll become a thought leader. It's like the Rodin sculpture. I think, therefore I am. To the extent that people that see you write these articles on LinkedIn, they'll think you're an expert. And after a while, what will happen is the media will approach you for quotes, etc. It'll also help you in terms of other companies approaching you to interview you, so you get paid what you're worth. Yeah. Or start a company like I've done. Okay. And I want everybody watching this webcast, if you work for a big company, I want the end goal for all of you to be to start your own firm. And I want to be the catalyst for that change. I want to help you do it as well. But you're not allowed to do it until you write a full business plan first. Because starting your own company is, it's stressful, and it's the most important decision you'll ever make. And failing to plan is plan to fail. So I want to help you start your business on the side. You'll keep it confidential. You won't tell anybody in your company or any of your colleagues. That's right. Then the decision to quit your job should be when your trailing month's revenue in your side hustle, 6 months revenue, 6 months, is greater than your annual salary. I want everybody here to start their own company one day. Otherwise, you're going to wake up one day when you're 53 years old or 78 years old, whatever, and realize, fuck this, man. I don't want to get out of bed because I have to go to work today, and this schmuck is going to pay me this much money to make his dreams become a reality. The only way to live your life in your own terms is to have your own company. And when you have your own company, you save a fortune in taxes as well. I want you all to be self-employed. When I worked for other people, a lot of the companies I worked at were great, but there were some where there was bullies there. I hated it. And if you're being bullied at work, and I say this with love in my heart, good. I say good because with love in my heart, that will push you to want to start your own company or get a better job. And I remember when I worked at Accenture back in the 90s, Accenture. It's actually a good company. There was a guy, I was in Toronto on a client site working on the merger of Manulife and Confederation Life. And there was an associate partner. I will not name him, but I want to, but I won't. From the Orange County office. And it was 10 p.m. at one night in October of 1995. And he asked me to print out this database report. I couldn't figure it out. I tried really hard. I didn't want to mess up the database. So I said, sir, I tried really hard, but I couldn't figure it out. I'm sorry. And he looked at me and he goes, it's because you're incompetent. And then he walked away. I was so mad. I remember calling my girlfriend, Rochelle at the time, at night. And I was like, this is so ridiculous. He did this to me. And then I was so mad. But in hindsight, I'm glad it happened because it forced me. It forced me to get outside my comfort zone and get a better job and eventually start your own company. And one of the most frustrating things can be is you work for somebody else and you're so good at what you do, they see you as a threat. They're so insecure they feel that they hired their assassin. And so you have to dumb yourself down. That's no way to live. Yeah. What I do with my employees is this. Well, first of all, I don't pay base salaries. It's a meritocracy. You eat what you kill. They get 20% of whatever they sell. Right? So there's no politics in my company. And when my employees come to my house, what I do is this. I always put my arm around them. And I show them my Mercedes. And I say, buddy, if you work really, really hard this year, really hard, you know what I'm going to do? I'm going to buy myself another Mercedes. I'm just kidding. That was awful dad humor. Sorry. All right, we got a couple minutes left, and then I got to jump. For those of you that pay for my premium services, I do my weekly 3-hour and 20-minute Zoom call. You guys all have the Zoom link. Okay, give me 1 second. Yeah, Manas wrote, if AI does everything, what will we do? Salesforce fired 4,000 employees. Yep. As AI replaced them instantly. Yeah. And then you wrote, what companies or sectors are not going to get hurt by AI? Yeah. So anything manual. So what's happening right now in the private equity space is private equity firms are investing a lot of money buying hairdressing salons. AI won't replace that. Plumbing companies. AI ain't going to plunge your toilet, etc. And a buddy of mine here in the Bay Area, he just sold his plumbing business for $40 million to a private equity firm. Yeah. So contracting work, etc. That stuff is hands off. Yeah. Okay. Okay. Next question is, what do you think about machine learning engineers? Do you think they'll be on the demand in the future? Yeah. I mean, I don't know. I know that machine learning is a subset of AI, but Jensen Huang, the brilliant CEO founder of Nvidia, said you shouldn't study computer science anymore because AI is going to do that for you. So I'd probably be a little bit more on the cautious side. If you're strategy-based AI or ML-based consultant at a firm like McKinsey, I think you got a great career longer term. But if you're hands-on executor, meaning programmer, it's an issue. And so there's this notion going online right now. A lot of people are talking about how execution jobs are at risk because of AI, but strategy jobs are not. And I tend to agree with that for now. But I think the best job you can get, period, in any industry is direct sales. Because I don't think AI might replace indirect sales, but direct sales, I think I'd rather shake somebody's hand and trust a person. I don't trust AI. So I think direct sales is safe right now. In fact, 75% of all jobs at investment banks are sales oriented. A lot of people don't realize that. Yeah. So if you're customer facing, right, the most important thing about a company is revenue growth, right? Sales, same thing. If you're customer facing, you're safe. I believe you're safe. Now, if you guys work in a company and you work in sales and you have customers and management wants to promote you so that you don't have customers anymore, tell them no, or tell them yes, but I still want to maintain customers because you're expendable. Yeah. Okay. All right. And Moss wrote, so India and Canada and Brazil have the highest tariffs in the world. Is that right? How does this make sense when two of these nations are part of BRICS and one was closest ally of the U.S. not long ago? Yeah, so I don't know. So I know that BRICS, which is a term that Jan Hatzius from Goldman Sachs, where I used to work, came up with. He's an economist. BRICS stands for Brazil, Russia, India, China, and now South Africa. I don't think that Brazil charges the same tariffs to all those BRIC countries itself. Yeah, but Brazil does have messed up tariffs to the extent that there's 100% import tariffs. And that's why a lot of Brazilians, when they come to the United States, they buy a PS5 and they bring it back with them. Yeah, it's half the price. Yeah, but I don't know the exact answer to that. But I do believe that tariff wars for the United States will help the United States in the very long run. Trump is long-term focused. He has to be. You know, one of the reasons China is successful is because they're very long-term focused. You know, people say that Chinese communists are the best capitalists. China doesn't make, 1-year decisions, 2-year decisions. They make 100-year decisions, which is brilliant. That's how Warren Buffett does it when he invests in a stock like Coca-Cola. He thinks long-term. It's the only way to run a business, government, etc. So Trump, love him or hate him, I didn't vote last time. Okay. And I particularly disliked what Kamala Harris said about how dare we say Merry Christmas. Sorry, little side note, but I didn't vote at all. But what I do like about Trump's policies, okay, some of them, okay, and there's nothing wrong with agreeing with some of his policies if you hate him, right? Let's be intellectually honest. I think his long-term policies when it comes to the economy are good. And I think what he did with respect to Iran, bombing nuclear facilities, is good. And I hate it when Democrats say that wasn't good. Like, accept the fact that he's right about this. Is it a good thing or a bad thing that Iran has nuclear weapons? Okay, let me go on. I don't want to get too much into politics. And I do have to go in a couple of minutes. So if you have questions I can't answer, ask me during the Zoom call coming up in a couple of minutes. If you're a premium customer, or ask me next week. Yeah. Okay. Sundar Pichai from Google or Satya Nadella from Microsoft. What is your pick if I had to pick one as CEO? Well, definitely Satya. Satya, he's kind of like a founder to the extent that he created Microsoft's cloud business, meaning Azure. And he was the logical choice to replace that bully Steve Ballmer as CEO. Sundar, I don't think he really created anything. Probably good at politics, but that's not for me. And the same thing with Andy Jassy, the CEO of Amazon. He was kind of the founder of Azure, of Amazon Web Services, which is Amazon's cloud-based offering as well. Yeah. I don't think Sunday will last that long. Okay, Charitra wrote, what is your take on China and rare earth mineral supply chain bottlenecks? Yeah, it was a material issue until recent. I do have to wrap this call up. It was a material issue until recently. The United States has since... Alexa, stop. Okay. It was a material issue until recently. The United States secured a lot of mineral rights in Ukraine and other regions of the world as well. To the extent that within 5 to 10 years, we will not be dependent on China for rare minerals anymore. Yeah, that's a good thing. And for those of you not sure what rare minerals are, they're used in a lot of alternative energy technologies and next generation technologies. And also for those of you who have the Switch 2 like I do, I'm hooked on Donkey Kong Bonanza, which I bought for my kids, but I'm playing by myself now. But for those who have the Switch 2, you know the magnetic thing, how the controllers will snap in place? That is used with rare earth as well. Too much information. Okay. All right, there's tons more questions I see. I won't be able to answer them. Save them for next week. Or what you can do is go to the description of this webcast, okay, and set up a call with my team to see if you want to join my programs because I do 7 hours of group coaching every single week. So go to harounventures.com, and down at the bottom, it's tough to see. I think I'm blocking it with that black thing at the bottom. There's a blue button that says book a meeting. Click that and set up a call with my team, okay? And then we'll talk to you guys. I have a 30-day 100% money back guarantee in everything I do. So if you sign up and you get a ton of one-on-ones with meetings with me, you get all my content and stuff for 30 days, hey, you get your money back. Yeah. All right, guys. God bless you. This has been fun. I'm going to end this webcast with a short 1-minute video that is going to change your life, which is an interview with Steve Jobs, which I licensed from the Silicon Valley Historical Association. Thank you all, and God bless you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.